Welcome to the show. Today we have on a special guest. His name is Chris Dobbin. Chris is the founder and CEO of Nova Leap Health. Nova Leap Health is a serial acquirer of home healthcare companies across North America. Chris, how you doing?
Great, appreciate you having me, Robin. Nice to join your show.
Yeah, it's a pleasure to have you. It's your first time on. Chris, tell us about yourself before Nova Leap Health. What were you doing?
Where do you want to start in terms of professional background?
Let's hear it. Yeah.
Yeah, so I guess after university, I ended up going the CA route, chartered accountant route, CPA now in Canada, I guess. So I worked with Grant Thornton for about 3 years in a Moncton office in New Brunswick, which is kind of where I grew up in the New Brunswick area. I transferred to the Halifax office. I spent another, oh, I don't know, 4 years in that office, mostly on the tax planning side of things. So I think I was a senior tax manager when I left there. So I had about 7 years in total with Grant Thornton. I actually got offered to take a position at BMO Harris Private Banking, and so this was a relatively new concept within BMO where they're starting up like what they call their private bank. And so that was actually a lot of fun. Probably the best job I actually ever had. It was early on in its infancy. It had a few people in the Halifax office. We expanded it to St. John's, Newfoundland, to Moncton, New Brunswick, and so just a period of a lot of growth. So that I really enjoyed the time there, and I spent about roughly 5 years there. I would say on a track where there wasn't much upward mobility within Atlantic Canada anymore, where I was within the bank. And so the next spot for me was to go to Toronto. And my wife and I thought hard about that for a long time. I remember looking at MLS and all the different areas there, and we spent months doing that. And it was interesting because I got to a point where I remember saying, making a comment to my wife Jill. I said, the only reason we're really thinking about making the move is because of money, right? And I said, well, we can make money any number of different ways. And so I said, if that's the only reason we're thinking about it, then we're not going. And because I knew the path within the bank was Toronto and then Chicago and back. And, we have family within Atlantic Canada, my folks and Jill's folks and, lots of cousins and so on. And so it was just one of these things where, we enjoy where we live, and we thought we could do lots of other things in this area. And so kind of made the decision to leave the bank at the end of '09. And I really thought I was going to end up buying a small business. And that was sort of the path that I thought I would sort of venture down. But one of the clients at the private bank had come to me and said, look, you used to work with a bank, where you lent money, and that was not what I was involved in, but they just associate bank and lending money. Got a couple guys looking at doing some things in the offshore. Would you meet with them? And I said, sure. And so that meeting actually became what ended up the genesis of me creating a private capital markets investment bank. And so for the next several years, I ended up doing mostly buy-side transaction work. So my clients that were looking at making acquisitions, they'd come to me. I'd work with them identifying targets, arranging the financing, doing the due diligence, negotiating the deals and the terms and so on. So a lot of M&A over the course of probably, I don't know, 7 or 8 years, I guess it was. And so it was during that time that my father-in-law was diagnosed with Parkinson's. And I'd never had anyone that was a family member that really had that type of condition, and I'd never really dealt with dementia in the past. I didn't have any experience with it, and it was, so that was kind of eye-opening to me, just the impact that it has on families. And in the latter part of his life, my mother-in-law decided to get a home care, really for him and for her, and very nice people that came in and provided the care. And I would say shortly after he passed away, my wife actually came across a home care business for sale, and that we ended up buying that business back in 2015, and that ended up being again the genesis for the creation of Nova Leap Health Corp. And so I'd say my history is somewhat traditional. If you think about, working with an accounting firm for a number of years, then working for a bank, which I said, by the way, I'd never do. I said I'd never work for a bank, and I did, and ended up being a great job. To actually starting an investment bank focused on the private markets, and then life circumstances and family situations sort of opened our eyes in terms of a need that exists in the market, and that'll continue to exist for several decades to come. And so that led us to sort of where we are today.
Yeah, I'm sorry to hear about your father-in-law, but that was basically the inspiration, and it remains legacy, right? And your mission for the business and in growing this out. So I think it's a beautiful story. Tell me, Chris, about how you're able to locate and close on that first home health care company. I believe you said in Nova Scotia.
Yeah, so that was listed for sale, and so within Canada, for those that are ever looking for a business, there's sort of these main business brokerage websites that exist out there, Biz Buy Sell and so on, and so we came across this business which was for sale by a local broker in Moncton, New Brunswick. We reached out, and then there's a typical process that involved whenever you do that. You sign the NDA, you get access to information, you kind of look at it, you have to call with the owners, find out a little bit more about the business, do sort of broader market research and so on, and then figure out whether or not you think it's a good deal, and then you make an offer, and that's really it. It's buying a business is not difficult. Like it's really not difficult, especially if you know what you're doing. I mean, you try to figure out whether or not owners are honest, whether or not they're hiding stuff, whether or not due diligence sort of pans out. But it's really just about asking questions and then listening and trying to figure out whether or not your due diligence is sort of validating what you've heard or what you think. And there's the financing aspect, and financing in itself is usually a pretty easy thing to do if you're buying a good cash flow business. So typical process that we still do today with Nova Leap, and probably the same process I used back in 2015. Although again, I had several years of experience in buying businesses previous to that. So for someone that's entering and doing it for the first time, obviously it's not going to be as seamless. But once you get to know the process, it's a pretty simple process to follow.
Yeah, so this first home healthcare acquisition was basically like a mom and pop independent run company. Is that right?
Yeah, I think it'd been around at the time for 15 years, if I'm not mistaken. Owned by a couple gentlemen in Truro, Nova Scotia. They were the original founders of the business, so we ended up buying it from them. Kept the same team in place within the office, and then there's a pool of caregivers that were providing service within a local area. So we went from this family experience of my father-in-law to, a much broader, sort of client base, and I would say it, kind of reinforced what we saw in our own experience, but also, really just, opened our eyes in terms of what we thought the opportunity was, and how big of an issue it is, quite honestly, within society, and so again, that's kind of the start of it all.
Yeah, that's just great. So when most people pull up the company or pull up the stock chart, Nova Leap Health, they might bucket your company into other companies like REITs, for example, Chartwell, and they might think, okay, Chris is just acquiring these elderly care homes, but that's not the case. So tell us exactly what it means to be home health care, and what are these companies that you're acquiring?
Yeah, I get it quite a bit, right? We've been around now since, our first acquisition was in 2016, and so, what's that, 8 years, I guess, into it. And, people will still approach me, and sometimes it's insurance executives trying to sell me insurance, or sometimes it's other things. But the approach is, you're operating these facilities, right? And immediately, they haven't done any research, because that's really not the case. We don't own real estate. We don't own independent living or assisted living or nursing homes, or we're not a REIT. Home health care or home care in of itself is a service-based business, and in our business we have seniors that are in their home. They want to stay within their home, and so we would send a caregiver, could be a personal support worker or a CNA or a CCA depending on the location, or an LPN or an RN, but we're delivering some form of care within their own home. Now, we also do provide care within assisted living or independent living or nursing home. We provide care within the facilities, but we don't own them. So purely a service-based business where we don't actually own the real estate, but again, certainly provide the service within those types of facilities.
So most people might just glance over that and think that you're owning these facilities, which is not the case. You're a home healthcare services company. I just wanted to clear that up for everybody. So you make your first acquisition in 2015. At what point, Chris, did you and your wife Jill say, this is a business that we can turn into something bigger? We can keep on acquiring. We can build a portfolio of these services companies. Like at what point was that?
I think it was when we were looking at the business. So when we were looking at this business that we purchased back in 2015, initially I was opposed to it. I didn't think it was a good idea. I didn't. I probably mentioned this to people in the past. Jill thought it was a great idea. I don't necessarily think that I thought it was a good idea at the time. And the reason is because, and I'll sort of contrast this to like a SaaS-based business. With a technology-based business, you get a lot of scale, right? You have a product and a tech product that you have out and it's built, and a lot of people can use it at the same time, right? And that's how you get your scale. Within the home care business or home healthcare business, you have one person providing service to one other person. It's one-on-one. So your product or service can only be used by one person at that time, right? That's an hour of service. We bill for every hour. So we don't have the ability to take one person and bill 20,000 at the same time, right? It's one-on-one. And so I was really concerned about scalability. It's a high turnover business in terms of the employee-based caregiver level. That was a concern. So there's a number of things that you naturally look at and say, what are the risks, right? A lot of being in business is risk management and just understanding, how to mitigate some of those risks. And so, when we first looked at it, it was like, I'm not so sure this is a good idea. But as we looked at the market, and I looked at the U.S. in particular, I was amazed at how many of these small independent non-franchise businesses that I saw, and it was in the tens of thousands. I mean, I was just kind of blown away how big the market was. And again, back to my experience with my father-in-law, I didn't understand home care at the time, right? I hadn't had any experience, so I didn't understand the market. And so I remember saying to Jill, I said, look, if we're going to buy this business, then we're going to go bigger. And that was really at the time where I thought, we can buy this business, and we can learn a few things from it as a private business. We can test different models and test different things, but I think there's a broader opportunity here for a much larger business. And then it was really a consideration of, well, what's the right structure, right? I mean, we could continue down the path of that. So remember, this was a private business we bought. This was before Nova Leap. So the question is, what's the right structure? I had experience with venture capital. I mean, I've invested in venture capital funds. I've raised money for venture capital type entities. I had started the first exempt market dealer within Nova Scotia with the head office in Nova Scotia. So I understood the exempt market. So that's where sort of a different level of companies raise money from generally retail investors. It's pretty popular out west, in Ontario in particular, a little bit less popular out here in Atlantic Canada. There's the private equity model, right, which is typically your lower entry point is like a $2 million EBITDA type business. So, and then there's a public vehicle, which is the capital pool company vehicle, which is what we ended up choosing. And some of the considerations were, well, I've invested in enough private businesses to know that, it's like a 14-year timeline often before you start a business to an exit, right? If you really want to see the full value cycle, I mean, you can exit on on another private placement to sell to new investors and stuff like that, but you're not going to recognize the true value that an exit would give you. And so it's often 14 years, right? So it was, do we want to go VC? I didn't want, or PE, and I didn't want another entity to tell me to sell the business in 5 years, right? The average, I think at the time I started business, the average hold period was 5.5 years in Canada. That's not a long time. I appreciated that people can get in and out of their investment if they want. So if they think that management's doing a good job, they can exit their position. We've had people do that. If they think we're doing a good job or there's potential for us to do a good job, then they can enter. And I like that about the public markets, right? It does provide that liquidity. I mean, people could look at our stock today and say, well, it's a highly illiquid stock. It doesn't trade. Trust me, you want out, you can get out, right? You want in, you can get in. Like people look at the numbers and say, well, it doesn't trade much. If you want out, you can get out. So that availability of getting in and out is people made their own decisions for their own personal reasons. The ability to run something in perpetuity without having to worry about a fund saying, well, we have to exit to return our capital to investors. We're going to sell you off to somebody else, right? Those are distractions from my perspective, and so that's how I was thinking about it back in 2015 and 2016 as I thought about the capital pool company or CPC process, and ultimately that's the route that we chose to go.
Yeah, and tell me about the acquisitions leading up to the IPO. What was the second acquisition in the U.S.? Did you stay within Canada? Tell me about that.
Yeah, so again, we bought the private business in Truro, New Brunswick. That was our first business. That was in March of 2015. We ended up doing an IPO with Nova Leap. So the way the CPC program works is you get a group of investors. I think there's a minimum of 3. We might have had 7. There's a seed capital that effectively goes into a newly incorporated company. So we incorporated Nova Leap Health Corp. We seeded the money. So I think we might have put in $500,000 if I remember correctly at the time. Again, that was early, sort of maybe January 2016. We then did the IPO in April of 2016, where our IPO was $350,000. I mean, probably one of the smallest IPOs around. So at that point, that's 850. All these, investment. There's sponsor, like you have to have a sponsor, some investment bank, and legal fees and all this stuff. So we probably had around 650 or so, maybe after it was all said and done. And so then we have to do a transaction. So at the time, you had 2 years to do a qualifying transaction. We ended up announcing a deal, I think 2 months later in New Hampshire. Very small transaction. I think the purchase price we were paying was $240,000, which today may still be the smallest qualifying transaction in the history of the exchange. It was, at least verbally, what they relayed to me at the time. And I mean, really, really small transaction to go public, right? I mean, people would probably think it's kind of a bit foolish to go public at that size, and maybe it was. I don't know, but so that was, and so we announced it in June. It closed in October. So seed in January of 2016, IPO in April, announcement of the qualifying transaction I think in June, and then close in October. And quite honestly, the difference between the time we announced and closing had to do with all the stuff you have to do for a qualifying transaction. So if you imagine a small independent mom and pop shop, they don't have audited financial statements, right? So all of a sudden we have to get an audit of this company that's in rural New Hampshire, right? And that, and we have to go back, I think it was like 2 years to do it, right? So, there are some things that are, a little bit cost prohibitive, but also, I'm not sure how much they truly add value as part of the process when you think about that size of company having to get an audit. But those are the things that we had to do at the time, and I think we'd still have to do. And so that's kind of how we got started. So here we were at the end of 2016, this tiny little business. I think the company we bought might have been approaching, $400,000 of revenue at the time. Certainly not enough for a public company to be, profitable with the listing fees and all the other things that come along with being public. And it was really not until September of 2017 where we started being maybe October 2017, where we started being very active, and so that's where we went on this path of, quite a few transactions in a short period of time. So we closed one in Rhode Island, I think in October 2017, in Vermont, November 2017. I think we were maybe February 2018 in Massachusetts, April 2018 in Massachusetts. We were, another one in the summer of 2018 in Halifax. I think we might have done 5 in 2018. And so it was acquire, and we did it all through to the end of 2019 as well, and then COVID hit. So that was sort of this path of starting very, very small, $500,000 of seed capital, tiny IPO, tiny qualifying transaction, and then we started buying mom and pop agencies over a period of a couple of years, and that was the start of to get us to where we are today.
And the map behind you illustrates that growth and that journey, doesn't it? Right? I think you have a pin in every acquisition that you've made.
Yeah. I try to. I don't know. Make sure it's still accurate, but those pins sort of, they represent the acquisition. So you'll see we have quite a few pins up in New England area and in Nova Scotia, and then we sort of jumped over quite a bit of the states and made an acquisition in Oklahoma. But we had done that only after we were quite comfortable that the model that we were pursuing was working, and it was working really, really well within New England. And so that gave us the confidence to take it to another territory, which is what we did.
Yeah. So tell me about that process of getting into the U.S. You're working with a broker, obviously, in the U.S., but are you going down to visit these mom and pop independent owners?
Oh yeah. So just be careful when you say we working with a broker. So the brokers, they would list the business. We didn't engage them, so they would list a business just like a business broker would up in Canada, and then we would reach out based on the listing. So we probably ended up doing 4 deals within the first few years with a number of different brokers who were representing the sellers. And what would happen is, again, just like in Canada, we'd sign the NDA, we'd get a package of information that was already prepared by the broker. We'd take a look at that information. We have a pretty standardized list of questions that we would send down to back to the broker. Their client, the seller, would fill out the information. We get the answers back. And then we typically have a phone call, or a video call, or Zoom, or Teams, whatever it may be. And that would be sort of the start of it. And then, based on the questions we would ask, we would get a sense of whether or not we're comfortable with taking the next step or not. But it would always involve going down, and we would meet with the typically I would meet with the owners, either in the broker's office, or I'd have dinner with them or whatever it may be. But I would always make sure that I met with them individually, and I got to know them and just understood more about the business, what was driving them, how they treated their employees, just any areas of risk that I should be aware of. So just you ask a series of questions, right? And the more questions you ask, the more information you get, and you listen, and you take that information in and you interpret it whichever way you interpret it, and then that leads to a decision of whether or not to continue on or not, and that's typically the process that we follow. But I always made sure I met with the owners. I thought that was an important part of the process. And sometimes in hindsight, and I didn't know this at the time, we'd be competing against others, right? I mean, you always knew that when a business is listed for sale, there are others that are looking at it. You just don't know how qualified they are. I mean, I'm sure the business brokers would always get, inquiries by a local person that probably doesn't have the same capacity to buy the business and stuff like that. But the ones that we were competing against that had a similar model that we do, not a lot of them around, but there were a few, and so we would end up competing against the same people. And sometimes those personal meetings would go a long way to providing confidence that we might be the right buyer for their staff. More often than not, it comes down to how much money we're going to pay. But it didn't always. We found out in certain cases that we weren't always the highest bidder. And that's really interesting, right? You have someone that's accepting a lower amount from us, but yet is choosing us. And I think having those types of personal relationships and making that effort, it does go a long way. I think that's been proven out.
So there's tens of thousands of these home healthcare businesses across North America. So what sets apart the ones that you've acquired, what metrics are you looking for? What questions are you asking? Tell us about the framework and the model, Chris.
Yeah, I mean, these businesses that we're looking for have generally been around for 10 or 15 years, right? So these are generally succession plans by the owners. You know, they founded the business, and they're just at a point in their life that they're looking for a retirement. We've had some that have just sold the business and literally they're in the state of Florida the next day where they don't have to pay any state taxes on their sale. And you know, every situation's been a little bit different, but you know, they usually have a good office team that they're leaving behind and that we get the benefit of working with going forward. And so we spend quite a bit of time in trying to evaluate the office team, right? Because we know the owner is going to go, and you know, one of the I guess you know, concerns people always express to me is, look, you have an owner, they built the business, they have their reputation within a market, and they're leaving. Aren't they going to take all the referral sources with them? And you know, it's true that they built the relationship in the market, and they do have a lot of referral sources. But if they've done a good job, then they've put their office team in place that those individuals have built, you know, relationship with the referral sources, and you know, they've contributed quite a bit to the local brand and to the operation. So you know, we're pretty careful in trying to understand the role that the owners played, and you know, relative to the role that the other office team members have played, and that sometimes drives their decision. So if the owner is the one that's been out marketing and doing all the business development and you know, working 24/7, and these are hard jobs. Like that, you know, people don't appreciate within the investment community. I know this for a fact. They don't appreciate how hard it is to run a home care business. Right? They see a stock price and goes up and down, and they may make a determination. Stock price is up, it's a good business. The stock price is down, it's a bad business. I mean, that's a lot of how retail investing works, unfortunately. But these are hard businesses to run, and you have really dedicated people at the office level that are working with the families of the clients that we provide service to, and it's tough. It's a tough job, and so just understanding like the office team and just how committed they are, and just the length of that they go to provide excellent service. I mean, it's really critical to our success. So you know, we spend a lot of time getting to know the office team and what they do, but I'd say we're a little bit careful where an owner is saying that they're working sort of 24/7 and they don't delegate. Like that's, again, tough job, a lot of work. You can be busy in this business 24/7 without question. The difference, I think, between the successful agencies and the ones that aren't are the ones that are working 24/7, and we have purchased a couple companies from those individuals. They're phenomenal in terms of the commitment that they've made, but they haven't necessarily delegated in a manner that would make a transition easier, right? Truly sort of this working in the business versus on the business concept, right? It really applies to these small independent businesses, and they're small, so sometimes it's hard to hire the resources that they need, but there are definitely ways that they can delegate certain tasks that would make it better for a purchaser to come in and buy the business. And so we're very careful just in terms of understanding those dynamics.
How many companies have you acquired since 2016?
Geez, I think we might be. So we just announced today that we closed on a Florida-based business. So this would be, you know, 20 or 21. We're sort of up in that range.
And then going forward, on average, how many acquisitions do you plan to make on average? Your target
In the run of a year? You know, I don't know that I would look at it that way. I used to look at it and say, you know, we would probably make, you know, 4 per year as an example, because that's what we'd average, right? One year in 2017, again, we did 2. In 2018, I think we did 5. In 2019, I can't remember, I think we did 3, right? So we were sort of averaging this 4 per year for a while, probably all the way up until the end of 2021. We did 3 in 2 weeks, right at the end of 2021, and then we sort of paused the acquisitions during COVID. But I don't, you know, if I look at the average business within the home care space, $2 million of revenue, right? I think it's 1.9. So $2 million of revenue, right? Small businesses. So we could buy those all day long. But sometimes we look at businesses that are $5 million of revenue. So I could look at the average and say, yeah, we'd like to do, 4 or 2, whatever the number is, right? But that might get cut in half if we're looking at $5 million revenue business versus 2. So we tend to think of, when we're sort of budgeting ahead, what's reasonable for us to acquire in sort of revenue and EBITDA. That's more the way we look at it. I think most people say, well, you've just announced 2 acquisitions, so that's sort of 2. You did one in May, so that's 3, right? And that's fine, but we look at it more in terms of what are the metrics it's going to sort of provide to us going forward.
And what's been your biggest acquisition? And I would say, was that the pivotal point for your company in the past 8 years?
The biggest acquisition wasn't a whole lot bigger than the ones that we typically do. And I should speak to that too, but the biggest one we did was in the Midwest, in Kentucky. That's probably the biggest one that we did, and that's been a great business for us. I wouldn't say it's the highest return on invested capital, but it's a great return on invested capital. It was not the highest, but it would probably produce the most cash flow. Right, because at that time we paid up to acquire that business. So it was a higher multiple that we paid for the business, and so your return is lower. But it's been a phenomenal business for us, and so we would do it again in a heartbeat. I do get the question often, particularly from investment bankers. Can you buy a much larger acquisition? Well, yeah, of course we can. Right, if we've been trending $26 million of revenue, we could buy a $20 million revenue business. Do I think that's smart? No. I don't, right? And if you think about the nature of the businesses we acquire, and M&A as a toolkit in your strategy is inherently risky. Like M&A is risky. We do it, and we'll continue to do it, but it's a riskier strategy. I mean, any business that's out there always buying, that's a risky strategy, and I think people just have to realize that. And when you have an inherently risky, part of your strategy like M&A, I think you have to look at it in a way that mitigates the risk. So how do we do that as a small, publicly traded company? Well, we buy small mom and pop businesses. And so if we get one of them wrong, are we happy? No. Does it stop what we're doing? No. If we buy a $20 million revenue business and we screw that up, that will set us back 3 years. And that's the difference. So could we buy these large? Yeah, all day long. We could. We could dilute the heck out of the stock. We could buy these businesses. All this stuff I don't think is the right thing to do. The right thing to do for our company right now is to continue along the path we are, buy these small little businesses. It doesn't take a lot. 2 of these deals can improve our EBITDA by 20%, right? Like we're a small business. We continue to buy small businesses, and so that's the way that we're running right now. We'll take larger bites as we grow, just like most companies do. But I just think people have to realize, whether they're looking at our company or any other company, when they look at M&A as part of the strategy, it's risky. And the question is, what does the management team do to mitigate the risk? And that's how we do it. We look at these small businesses and we say, okay, we think it's going to work, otherwise we wouldn't buy it. If it doesn't, what impact does that have on us? But that's why we've sort of avoided these much larger transactions for the time being.
Yeah, there's M&A strategy, but there's also organic growth strategies. So when you do acquire these smaller home healthcare companies that, as you said, average around $2 million revenue per company, what's your organic growth strategy for increasing market share in the area, optimizing profitability, et cetera, Chris?
Yeah, and organic growth has been a struggle for us. That's been the largest portion, I would say, the biggest challenge that we've had. And I'm getting this a little bit. Like, I think there's a few factors that it's had. One, we were achieving a little bit of organic growth sort of prior to COVID. We got slammed during COVID. I mean, anybody that looks at our financial statements will see that our revenue was way down. And so what did that force us to do? It forced us to really streamline operations and cut expenses to the point where, again, we paid off all of our debt, and we ended up putting the company in very solid financial footing, right? Record cash flow for us, record adjusted EBITDA, and so that's where we are today. But if you look at any business, right, manufacturing, in the manufacturing sector, you would have your sales, right? So your throughput, you would have your inventory, and those that maintain a lot of inventory. There's costs that are in that system, and then you have your operating expenses. But you look at our business is the same way. You look at the top line revenue growth, right? And what do you do there? Our inventory per se is not a product, but it would be the hours of service that are available that we can produce, right? And then we would have the operating expenses. And I would say what we've done a really good job at is on the operating expense level and on sort of this concept of inventory management or cost within the hours of service, right? Because we're basically, it's almost like just in time to a certain extent. Like we're matching up our availability of labor with the demand of the market. And so where I think we've not done as good a job on, which is what we're really focused on, is this top line sales or throughput metric that I would call it. And I think part of it has to come down to the busyness that exists within a home care agency. And again, this is probably goes back to a lack of understanding of just how things work at the agency level. The family dynamics that we deal with. We actually get a lot of new clients in a run of a year, right? People see and say, well, your top line revenue is flat, right? And it's not growing. Yet we get a lot of new clients in a run of a year, because you have natural churn, people that might go to a nursing facility, perhaps assisted living, or they might pass away. Mm-hmm. They might have to go to a hospital for surgery, or might have to be in the hospital for an extended stay. So there are a lot of things that happen in a run of a year to our clients, and we're always replacing those hours with new clients. The question is, how do we get ahead of that even further? Part of it has been in some of the more urban centers where we operate, perhaps not having a dedicated sales team, and we've indicated that we'll beef that up. But I think more importantly than that is we've spent a lot of time looking at the roles within each agency and what contributes to just how busy they all are doing a variety of different tasks. And so we think there's a model there that can work for us really well, where we're a little bit more specialized in certain areas, and that frees up or generates capacity for some of our key people at the office level to be out in the market more, but really focused on our caregivers and caregiver retention, and focused on our clients and client retention, but also getting more referrals from referral sources. So there's something that we've been working on for the last few months that we're rolling out into 2025 that we think will have an impact, but time will tell, right? That's what we're trying to prove. So that's definitely been the biggest challenge from a financial metric, has been the top line revenue growth. We recognize that, and we're very, very focused on it.
Are there opportunities in your acquisition strategy to acquire not direct home healthcare companies, but maybe software companies that are supporting the industry and clients that you serve?
Yeah, there are. I mean, there are adjacent services within our industry. It's a question of, are we a home care company or are we a healthcare company, right? And right now we've acted like a home care company, but there are lots of other opportunities within the greater span of healthcare. It could be SaaS-based, which could be just supporting the scheduling that all the home care agencies do. It could be the utilization of AI in certain things that people are now rolling out. It could be, it could be anything that's more home health related, like what would be considered to be the skilled side of care. which is under the direction of a nurse. It could be wound care. I mean, there's lots of other things that have potential. It's really a question I think that any CEO sort of wrestles with is what's the right time to look at something else, right? You want to avoid sort of chasing the shiny object syndrome and stay true to who you are and the core business. We have something that works really well for us right now, and we're building on that. But at the same time, we're always looking at other areas that are adjacent to our current service. And again, time will tell whether or not we sort of pursue those. But I'd say we're pretty much focused on our core business right now.
Yep. So the maps behind you, you have pins, and all your acquisitions are probably most, it might not be completely updated. Your head is actually blocking Florida, the state of Florida, Chris, which is fine, but we'll get into it. Why was your foray as a company in Florida so important?
Well, if you look at the demographics of Florida, I mean, it's has the aging demographic that we look for. It's an expanding state. It's a Sun Belt state. A lot of retirees that are going there. Low tax jurisdiction for individuals, and so they tend to flock there. And it's one that we've looked at, quite honestly, ever since 2016. I can remember even before we made our first acquisition in New Hampshire. I had looked at least at one acquisition in Florida. So we have pursued opportunities in Florida. There's probably a couple I would have liked to have done in the past that didn't pan out for whatever reason. So we've always kept our eye there. I've always wanted to go into the state and finally sort of found the opportunity that was right for us.
How many targets would you say are in the state of Florida alone, if you look at all the fragmented?
I don't know what the number is, but we've seen businesses that have been built up there in excess of $100 million of revenue. And I'm sure that's at least the potential that the state offers. But I don't know. I mean, I have a list. I just don't know what the number is. I mean, we have a list per state where we are. And, hundreds of these operators in each state. How many would be in the state of Florida? I'm not sure. State of Florida actually is a little bit different than most states in that it offers a bit of a competing model against home care. So it offers what's called a registry model. So if you think about home care for us, so for Canadians that watch your show, think about T4, an employee. In the U.S., it's a W-2 for an employee, but there's also a contractor model, which is a 1099 model. And so that's where you, as it's contrary to what we do, we wouldn't be able to provide training. We wouldn't be able to provide oversight. We wouldn't be able to go into homes and do visits. It's really, the registry model is more about having a Rolodex or providing a connection between a family seeking home care and a private caregiver, right? So you could create a website and people would call in, say I need home care, and then you could offer choice of these individuals. That's a well-received model within the state of Florida, which we will now compete against. And that model doesn't exist as much in other states because it's kind of under attack in other states. It's very difficult to actually fall under that model. You have to be very, very careful. So that's a bit of a dynamic that we'll face in Florida that we don't face in others. But we knew that going in. It's been around for years, and we just kind of deal with it.
If you were to apply a dollar figure to the total market size of home health care, what would it be, Chris?
I don't know. I mean, I'm sure people would say, well, you're CEO of a company, you should know what the total market potential is. I don't really pay attention to it because if you think about our demographics, I think most people have heard about this statistic about in the U.S. Every day there's 10,000 people plus turn to age 65. Most of our clients are closer to the age of 70, right? So 70 plus is really, really where our focus is in providing support to those that have dementia. And I know it's a growing market, right? And it will, I think, for the next 45 to 50 years, the stats show that the market's going to grow. What that leads to in terms of total TAM, it's a big number, and I don't know exactly what it is. I'm sure it's an estimate and changes every year, but We know there's lots of opportunities. Like I said, thousands of these businesses that'll be available for sale, and we think we can capture a few of them, and that's kind of how we're operating.
Yeah, it's a fragmented industry, and you're consolidating it. Tell me about your board of directors on Nova Leap.
What do you want to know?
Let's hear about their background and the skills they contribute and the insights and.
Yeah, so there's six of us in total on the board. I'm the only non-independent, and then we have five that are independent. I would say they range from public company experience to private business ownership, to people that have been involved in M&A internationally, and those that have started up locations. We have one that's specific to the home care industry, and so Ann Whalen has operated businesses in Newfoundland and Labrador for many, many years, and it's actually her business we're buying out of Florida, which was started as a startup location, and so really a combination of those skill sets that we have. So private, public, new startup locations, M&A, and so they all bring a different perspective, which is really valuable for us as a company, because they have all kind of vast experience both in Canada, the U.S., and international.
And what's your insider stake, Chris? I have to ask this in Nova Leap.
Yeah, the total insiders or mine in particular?
Yours in particular.
Yeah, so mine's just over 10%, and
Okay.
And the total insiders is just over 40.
Wow. Okay, so that's significant. That's absolutely skin in the game. That's why I ask. So you're finding that you're bumping up against the same, I think, bidders and competitors, right? When you go to the table to negotiate before you make these acquisitions. Who are these competitors? Are they larger than Nova Leap? Who are you bumping up against?
So in the U.S., it really depends on the region. So in the past, like if we were looking at New England, and we would have run up against Houseworks, for example. So Houseworks is now, it's private equity or private investment sort of fund backed. I think their shift is focused primarily from private pay more to the Medicaid space, which is not where we operate. So their models changed since we were we were bidding against them, quite a bit, I'd say, in 2018 in similar regions. The key, which was rebranded from Home Care Assistance, which is a national footprint in the U.S. and to some extent in Canada, we would bid against them, quite a bit for some of the larger deals. And I would say they were the predominant buyer of the businesses, and probably were driving valuation up a little bit. I suspect, I can't speak for them, but I suspect they're probably still out of the M&A market for another year to year and a half. This is just a guess. But they disbanded their entire corporate development arm. So put it in perspective, I think they had purchased 60 or 65 deals in 1 year. And some of it was taking their franchises back as corporate, but a lot of deals, and so they've had to integrate quite a bit. So some of the transactions we've come up against in the past where they might have outbid us, we wouldn't see them now as a bidder. But again, that might change a year and a half down the road. So those would be two. There are others that are set up that are buying private pay businesses that we might compete with periodically, depending on the location. But there's probably a handful. Yeah, probably a handful.
And so that's helped from a valuation perspective. If you're not coming up against that same competitor, if they put pause on their M&A strategy. When you do acquire companies, of which you have around 20 to 21, do you rebrand every home healthcare company as Nova Leap, or do you retain the brand so that it has the same awareness on the market it serves?
Yeah, we traditionally we haven't, but we've just started to rebrand some of them, and so we're phasing that branding in approach. I think moving to a common brand does make sense. if you think about the referral sources, there's really two types. There's the local market referral sources. That there's a bucket of those, right? It could be hospitals, or rehab clinics, or previous clients, and so on and so forth. But that's a local market phenomenon. And then there's the digital part. And if you think about our business right now, I mean, I don't know, we probably maintain 15 different websites, right? And does that make sense going forward as one company? I don't think it does. So, we are in the process of revamping to make one sort of master website, which will then allow us to rebrand a lot of the smaller agencies into one brand. So I think that's coming. That's something that we're working on, and something we've already started. But I would say my mind's changed, and our team's mind has probably changed over the years. We never wanted this to be seen as us coming in as a big sort of corporate and buying these companies. We wanted to respect the brand, local people, local decisions. That still exists. Still local decisions, local people, local referral sources. A lot of people don't know that the market would know sort of we exist to some extent. But you get to a point where you're operating, like in Massachusetts, where we have 5 locations, and someone's out there representing us on a business development perspective, and they have to list 5 different brands, and it becomes a little bit confusing in terms of, well, why are you representing all these brands? So we've started to make the switch to a common brand. So that was really driven by the local market saying, the messaging is a little bit more difficult for us to have all these brands. We think it should be one. So that's where we are. We are moving to one common brand.
What else do you have in the pipeline in terms of changes, in terms of strategy of the evolution? Can you tell us about that?
Probably not.
Okay.
Look, I think from a strategy perspective, we're still focused on the core business. Like we love the business. We think we're good at the home care space. And so for us, it's really more about continuing to make more acquisitions within the home care space. In all of the states in which we operate, we have enormous potential. There is a lot of growth in each of the states where we are. And so that's obviously a priority. We still come across agencies that we like that are in different areas. And so the question is, well, why don't you just fill out the states you're in? And the answer is, well, when we come across a good agency that's somewhere else and they have a really good team and they demonstrate that they want to grow, that we're interested in that. And so, if I were building this company to sell it in 5 years, my answer might be a little bit different, right? I might just say, well, let's only do deals in Massachusetts, or Massachusetts and Rhode Island, or New Hampshire, like 2 states that are connected. But when we don't have a time pressure of 5 years, and we think about this as being, permanent in nature, then, we can go to the Oklahoma like we did back in, I think, 2019 or whatever it was, or 2020, and make that acquisition, because we know we'll fill up more in Massachusetts, and we'll keep doing that. But we also think we have other opportunities within, the South Central region, like Oklahoma and Arkansas and Texas. So I think you'll start to see, more and more of that. We plan on making more acquisitions. We announced recently that we obtained a $7 million U.S. credit facility from BMO Bank of Montreal, so that allows us to do more acquisitions. Obviously, we've just announced the closing of the Florida deal this morning, and we're just looking to close on the Nova Scotia acquisition. That's before shareholders. It's in front of them for a vote, so hopefully that'll be done in the next few weeks. And then we're looking at other opportunities. So, I expect we'll make other opportunities just because we're always looking at them and we have capacity to do it. When that happens, who knows? But we're still looking at that. But I'd say, core business focused, more acquisitions, and then just really focused on the organic growth side, which is what we've alluded to, some of the changes that we're making sort of at the agency level, and just really trying to free up and generate some of the capacity that maybe we've been constrained with in the past. And I think that'll make a difference. But those things take time, right? I mean, they take time to sort of pan out and show in the metrics. But that's really what we're focused on. It's a lot of more of the same, really, more of the same. And this is how we've grown and how we'll continue to grow, at least for this foreseeable future.
Yeah, well, this has been a fun conversation, Chris. It was great to get to know the company more. get to know the journey and what's in store for the future. So thank you.
Yeah, I appreciate you having me. It's been great to chat, and I appreciate the platform and what you're doing, and providing a little bit more exposure to companies like ours. So very much appreciated, and I enjoyed the conversation.
Yeah. Cheers, Chris.
Thanks, Rob.